Welcome everybody. This is the Thursday evening Viper Trading webinar. If you are here to learn about trading the futures markets using the Viper tools, you're absolutely in the right place. That's what we're going to cover tonight. Tonight's topic is go long, go short, or both. So we're going to be covering a lot of trade entries tonight. First, we got to knock our standard disclaimer out of the way, so let's go ahead and get that done. All communications from Viper Trading Systems are for educational purposes only. Futures and Forex trading does involve risk, and there's a risk of loss. Nothing contained in this webinar, other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here tonight does know that you do trade at your own sole discretion. Okay, good. Well, I'm going to start off with the Russell today. Most of you know I really like the Russell as a trading instrument. You know, if you were to do a sort of a scale of volatility on the equities, excuse me, hold on, let me take a quick sip of tea. Stand by. All right. The E-mini S&P is the heaviest traded in terms of volume, but it moves the slowest in terms of volatility. We have a lot of people that trade the ES, and that's an instrument you could look at if you don't need a lot of movement. You can put a lot of leverage on it. Of course, we trade crude oil, we trade gold. We'll look at those. NASI is the SPASI. We used to have NASDAQ in the room for years, and it was only about, I think, a month and a half ago, maybe longer, we kicked her out because she's so volatile that it takes like all your attention. So if you're going to look at NASDAQ, and actually YM's kind of turned that way a little bit too. They run those algorithms some days. You can tell they just shotgun those bars. So Russell's kind of in the middle. So if you put NASDAQ and YM on the high scale of volatility, in other words, you get big moves. The moves on these two are probably double what you get on Russell, on NASDAQ and YM. So if what I'm saying is, to be clear, if Russell was to move 10 or 15 or 20 ticks, it's not unusual to see NASDAQ and YM move twice that, 40, 60, 80 ticks. That's quite frequent. But here's the thing that's a little deceiving. When you have that much volatility, you're going to find, and I'll pull those charts up. We'll look at those charts in a little bit. You're going to find that it doesn't respect the swings in the mid-band quite as much. And so, you know, if you're a mid-band trader and you're finding you're getting these huge spikes up and down, I'm not discouraging. I think you should trade it. But number 1A and 1B in your success for trading futures are as follows. Instrument selection is critical and key. We have traders with us for many, many years all over the world, and they trade all kinds of different instruments. And so we have to show different instruments to everybody. But I would suggest, if you're starting out, focus on one or two at the absolute most. Okay? Pinky swear with me right now. You're going to focus on one or two, and then get one instrument down where you can just nail those entries. Okay? Now, some of you are new, and so I'm going to take a minute to explain what you're looking at here. Like I said before, we're connected to a rhythmic data feed from Ninja Brokerage. That provides the data. It's fed onto a 4-range chart that you see right here. And if we didn't have the Viper indicators on here, it would just be bars going up and down. It would be very, very difficult to see where to take trades. So we crafted these indicators, which is the background colors, the bar colors, the swing levels, the power meters, four power meters. We have predictors that you can turn on and off. You know, those are the swings in real time, right? And then, of course, the most prominent thing on the chart is the mid band. This large is the middle mid band, and we take a lot of trades around it. And we have four bands above it and 4 bands below it. Yeah, I can do that, Brian. I understand what you're asking there. Now, when you look at this chart in hindsight, what would you say the prevailing trend on the Russell was today? Up, down, or sideways. It can only be one of three. What was the prevailing trend on the Russell today? I don't know why I'm getting this cough. Sorry about that. Yeah, down. In fact, you could draw a descending channel over the tops of the swings that might look something like this, and you could draw a descending channel at the bottom of the swings, which might look something like this. Now, that being said, particularly in the first 30 to 60 minutes of equity markets trading or crude oil at the pit open, sometimes for gold around news events, you can let markets go both ways. Now, why is that? Well, when we say both ways, that you can allow it to take short trades, you can let the market take short trades, and you can allow it to take long trades. And the reason for that is that if your channel is wide enough, in this case, you're looking, let's look at the bottom part of the channel here, 77 support and resistance way up here at 85. So really you're looking at somewhere between a 70 and 80 tick channel. So what I'm saying is that there's plenty of opportunity to short the market and make money, and we're going to look at opportunities where you can get long. Now let me explain how we trade. We are what you call retracement type traders. So let's, before we get into the market open, which was 6:30 right here, I want to look at the pre-market session and talk about a few trades so we're all on the same page together. So what happens is this: is that you have this notion of thrust and pullback in the markets. All markets do it. Some, as I said earlier, more volatile than others. Let's look at some examples. Here's a thrust right here. Let's look at what a thrust in a market might be. So here's an example of a thrust right here. It's pushing down, background turns red, and then of course it spikes all the way back up. Here's another thrust right here. So let's go back over here a little bit into yesterday and look at some examples here too. So in an uptrend, the thrust part of the move is obviously the push up. In an uptrend, the thrust part of the move is the push up. And so therefore, in an up move, the retracement part of the move is the pull back into support where you're looking to buy. Okay, we don't ever buy thrust moves. You want to avoid that. Here was an example of a box that you could have let go either way. This would have been about 7 o'clock yesterday. In fact, we probably traded and took this, as I recall. And this is what you get all day long on all these instruments. You get a push up. You're in an uptrend. You pull back. You find support, and then you buy. You buy support, take some profits. Buy support, take some profits, and you continue on up. Now, let's talk about the most challenging. On the surface, I think you would agree that this concept is pretty straightforward. Yeah, I see that, Charles. I see it all the time. Markets thrust up, they thrust down, they pull back, and it's the pullbacks that we want to get in on. That's true. Now, that simple concept starts to become a little more complicated when you get situations like this, and this is the real challenge. This is the meat and potatoes of the challenge right here, okay? Let's look at some examples of retracements. Here, for instance, we get a retracement in the uptrend that is relatively shallow. Now, in an uptrend, when we say relatively shallow, I'm going to blow this up and be real clear about this, so there's no confusion about this. Shallow means, if I was just to put it really simply, it just didn't get to the midband. However, there are some criteria that need to occur to allow you to buy it. Namely, it has to come through. Can everybody see this little sort of snaky line here, this green snaky line? Okay, that's called the stealth. All right, that's the stealth line. We've had it forever. It's been on a chart since the very beginning. And then this little thin line here is called line 6. All right, so So what you're going to find is that these two levels have to be pierced on a long retracement. The opposite would be true on a downtrend, and we'll look at that when over here when we have a downtrend, we'll show that. Now, the ideal condition for most of us is that we like to see the market, whatever you're trading, come down and touch or hang out at the mid-band. This is an ideal trade. In fact, I would go so far as if you could learn simply how to trade shallow retracements, mid-band retracements, and slightly deeper retracements that you get, like for instance, right here. This is a deeper retracement where you go a little bit through the mid-band and find support. You had two of them. You had one there and you had one right here. Now, there's some confusion that I get about this once in a while where they say, well, you know, Charles, look, these bars are turning red. How do I know that's not a trend change? Well, here's how you know. There are times after a market has a large move up, like this move right here, from all the way down here all the way up into here, you get profit taking. And so sometimes markets can go sideways. So a lot of people think, well, you know, I'm either going up or down. You know, I'm going up, and then it's going to flip, V top, V bottom, whatever, and then it's going to go down, and now I'm short in the market. Normally it doesn't work. I mean, sometimes, if it's a very volatile day, it'll do that. It'll, V up, V down, flip around all over the place. But sometimes you'll get consolidation. So what I want to make clear about this condition right here in between these two lines, the trend is still up. That's where I think a lot of confusion comes in, is that the trend is still up. However, we would term it in the room something to the effect of like, it's up to sideways. Up to sideways means that you're still buying support. Up to sideways means you're still buying support. So these retracements. So the three to master to be successful in your trade entries are as follows. I'm going to draw it like this. And some of you, bear with me if you've been in my webinars before. I've said this probably 4 dozen times, but it doesn't hurt to hear it again. Okay, so we discussed the fact. Think of this as a strike zone. Okay, everybody's played or seen baseball or played or seen softball, right? And so the strike zone is you have a plate here. Here's the plate where the pitcher's throwing the ball, right? Whatever it is. And then the knees are the bottom of the strike zone, right? And your shoulders are the top of the strike zone. So it forms a rectangle like this, right? Forms a rectangle. So if you think about it, the top part of the strike zone, like in here, would be your shallow retracement, right? So we have to learn to master those. And it's going to take some practice. Okay, I'm not going to lie to you. I'm not going to kid around. It's going to take a little practice to do that, right? The middle of the strike zone would be located right around the midband, like in here. Okay, here's an example right here of a midband bounce long. You put a region box on there and you take that long trade. And then the third is what we call the deep retracement, which goes below the midband, as you see right here, twice on the right. And sometimes, and we get this a lot, it is quite possible that a market could come all the way down in an uptrend to this outermost band, and that is called a phantom trade. So in the room, you might hear, well, that's a deep retracement. That's looking like a phantom setup. A phantom simply means that the retracement has gone much deeper into this area, but we're still buying it. I would say that, and I'm going to draw a little arrow, from here to here takes some practice, because what happens is what we've seen over the years is that a lot of traders get nervous under the midband that the trend is changing. And so even though you're buying this, you're afraid that it's going to bip up, get you long, and then bam, stop you out. Mine are always close outside. So I do region boxes using Object Trader. Just everybody, Brian's asking this question. I use the region box with Object Trader, OT, like everybody does, and it's always close outside. Close outside. You can turn on bar close within the region box. The risk there, like over here, for instance, in this shallow retracement, see how there is a number of bars that are closing inside the region? So those would actually get you long before it closed out. If you did close out, you didn't get long until one of these bars closed outside of the box itself. See that? Closing inside, there is a risk that you never get this breakout, and then next thing you know, it pulls against you and stops you out. That's one of the main reasons. In my feeling, when the bar closes outside of this consolidation patch here, where the region box is, I have some confirmation that the trend is continuing up, and those trades are usually pretty effective, unless something funky happens. Now, does everybody understand conceptually what's going on here? So if you can, what you want to do is try to get market replay and replay the day if you can. You can only takes 15, 20, 30 minutes. And you can get market replay. There's a free version you can download, and it'll just record all your data. You can take your instrument, and then what you can do during after hours or wherever, you can scroll back and forth. You can go forward, you can go backwards, you can look at different parts of the day. You can say, oh, okay, now I see it was going sideways there. Okay, now, yeah, okay, I see 716. Yeah, it broke up. I'm in an uptrend. And then you practice seeing where you're getting in, and you can actually sim trade that. John asking, does Object Trader draw the boxes themselves, or do you have to draw them? So what happens is this: is you select region box, you hit the enter key, and the box will pop up, and it'll be a box that will look something like this. Here, let's do an example. Let's say that we pop the box up here, and the box will come up, and it'll look something similar to this. And it'll be like right near the price. So all you have to do is just position it where you want it. And then over here on OT, you can toggle on long only, short only, or both, and get all your settings. So you want to get all, excuse me, before you start setting up region boxes, you really want to get all your settings in the OT. Now here's the thing, I got less than an hour left, so I can't get into all the details of Object Trader. But Gary has like ebooks and I don't know, 20 or 30 plus videos that show every detail of how to learn that. So once you log into the subscribe area, especially if you're new, like you, Toby, you're going to want to go in that subscribe area and download and watch those videos because it shows you all the details on how that works. Okay? All right, so that's the entries. Now let's scoot ahead. Now that you're armed with this knowledge, I'm going to clean this chart up and I'm going to scoot over to the open, the equity market open. Let me get, man, my screens are all messed up. Hold on one second. Let me clean this chart off and get all this demarcations off of here. Okay, remove drawing objects, all drawing objects. Good. Okay, now we got a clean chart. Let me load this up for you here. Here we go. 630 is right over here. All right. Now, here's the first, darn it. Hold on. I don't have a cold or anything. I don't know why I got this tickle in my throat. But anyway. Here's a word of caution that I hope everybody will heed. As you can see, between basically about the open at 6:30, this line, this vertical line right here, and I'd say almost to 7 o'clock, what was the trend on the Russell in this little swath of time right here? What was the trend in here? Here's 7 o'clock over here. And here is 6:30. So the first, 25, 30 minutes of trading. What was the Russell doing? Was it in a trend? Was it going up? Was it going down? Was it going sideways? What was Russell doing in the first 20, 25, 30 minutes of trading today? Choppy, sideways, and range bound. Sideways and irritating. Okay. Well, look, I understand your comment. We can't get irritated because markets spend at least half their time doing this. All right. So here's what I'm going to suggest. You know, a lot of traders don't have um, consolidation or range bound trading in their bag of tricks, in their repertoire of trades. I understand that. You know, you get down here, you know, should I be buying this and covering my shorts? Yes. You know, am I up here? Am I shorting this up here and getting out of my longs? Yes. And the rule of thumb is that the range has to be at least 20 to 25 ticks, bare minimum, to be tradable. And this one comes down to, I don't know, around number 85, and the top's at 87.40. You're right on the borderline of being tradable. This is about a 24 tick range. Now, here's the thing. If you're going to trade it, you have to fade the top and fade the bottom, meaning that your buy and sell orders are going to have to be at least five ticks or more above the support. So if you're buying down here, these bounces, your trade entry is actually here. Likewise, when you're getting out and or shorting the top, your trade entries are actually here. Right? Everybody see that? This one wouldn't have filled until over here. Let's draw a line. So the meat of your trade, short and long, essentially is not the outermost location of the range itself. It's somewhere within it, like that. Like here's where you're actually buying and selling, right? So you're buying down here. I'm not going to do them all. You get the idea. Rolling over, you get out of your long, you flip, you take it short, you're covering down here, etc., etc., etc. Now, I would suggest take the instrument that you like, that you're working with. When you find ranges like this, try to trade the range like that. Try to trade the range if you can, just like that. And practice, practice, practice. What I'm going to say to you is this, is if you do some due diligence on this and you really put an effort in there and you find that you can make money at this, then by all means keep doing it. Now, for some reason you can't, your market doesn't respect the swings, it's real spiky, it shoots up and down, the fills are terrible, well then range bound trading is not for you. So you would just avoid it. Now, right after 7 o'clock, I want to show something here. I'm going to blow this up. Can you see how the market paused right here? I'm going to do it like this. See how it paused right there? Sat there for about 2 minutes. Now, on this particular box, would you let this box go L for long only, S for short only, or B both ways? Here's the box forming right here. This box, between 7:16 and 7:18, sat there about 2 minutes. And we actually said to box this in. I actually took this trade live in the room. You catch that one, Brian? Okay, try to remember what we said when we opened up the webinar. Remember in the first couple of 5 minutes, what did I say? Anybody remember? In the first 30 to 60 minutes, it's perfectly acceptable to have region boxes that you let go either way, because both. Okay, quite a few typed in both. Good. The correct answer, in my opinion, is both. All right, because in the first 30 to 60 minutes, it's quite possible that the market can go up, spike up, it can spike down, and of course, if you put the region box on, you are filled long on this bar right here. Now, I do want to show another price pattern that's really good and easy to learn, that's going to help you in your trading. And let me show you what it is. And, this doesn't happen on every trade, but it happens on a lot of trades. And so I'll show one, and then I'll do some more. Okay, let me ask you this question. Let me ask you this question right here and see if you can answer this for the team. Let's suppose that you, for whatever reason, weren't able to get this region box right here. Is there another place where you could get in the trade, yes or no? Okay, you didn't get this box. It spikes up to the top of this range. like this. So the region trader's already in. Right. Yeah, Toby, good call. Yeah, brand new. Kudos to the brand new guy. Yeah, look, we get a little pullback here. We get a little pullback, and it kisses that stealth line. Right, almost exactly where the bar broke out of the box. Right here, see it? That's another entry. All right, let's do a quick exercise now that we're all experts on this. Let's do a little exercise together. Let's suppose that you missed you missed this closeout. You didn't, whatever. You didn't have a box on there or whatever, and it pops up and it pulls back. You missed that one too. You're asleep at the wheel. Now I'm going to advance this chart, and you type in a T where you think you see another trade entry show up. Are you ready? I'm going to advance the thing slowly. I'm going to advance it slowly. And then you're going to type in a T where you think you see another trade entry because you missed these. All right? Here we go. I do this exercise all the time. I get a lot of positive feedback. A lot of people like this because we're gonna work together as a team to see. Now, don't type in a T now because I haven't moved it yet. But I'm going to start moving it, okay? All right, here we go. Type in a T. Go bar by bar. So now you're at 7:23 a.m. Pacific. We're still in the room. Okay. Okay, now you're at 7:29. It's almost 7:30 in the morning. Watching the Russell, looking for a trade entry. Okay, let me blow the bars up a little bit so you can see them a little bit better. Remember, when you see what you think is a trade entry, you type in the letter T. Okay? Okay, here we go. Blow the bars up even a little bit more, make them a little bigger. Okay, advancing the chart. Okay, I'm going to stop right there. Now, there is two factions of trade votes that have come in on this exercise. The first wave of T's came in when these bars formed right here. I could see where you would, and your argument would be, well, it pierced the stealth line, and your question might be, well, is that a similar entry as this right here? In my personal opinion, that is just a little too shallow. Now, the second wave of T's came in when these bars formed right here, and that is correct. So remember our rule of thumb, right? Remember, we have shallow retracement, mid-band retracement, deep retracement. So this falls into the shallow category because it pierced both the stealth line, the green snaky stealth line is pierced, and line 6 is pierced as well on the pullback. So you simply put a region box around there. In this particular case, under these conditions, this would be a long-only box because now you're in a very strong uptrend. Now, I want to distinguish the difference there. The difference is this, and you might say, well, now why are you biased to the upside? And you said over here that this box can go either way. Look at the location of these boxes. Can you see how different they are? The position of the box and the status of the trend between this box and this one right here. Does everybody understand what I'm talking about? This box is technically still sort of in the middle of the current trading range and actually is coming off of a thrusting down move. So it's quite possible when that box formed that it was just going to be a follow-through and another leg down. But at the time it formed, we didn't know that because if it broke to the upside, we thought at least it would get up to here, which it did. Right? The background is green. The trend is up. In this condition here, I just want to show the different conditions and how you can spot them. When a market is sideways and trying to decide which to go, one of the main characteristics is that this mid-band is going to be flat and sideways like that. See it? However, in the up condition, when you are in a strong uptrending move, there will be a stair-stepping of all the bands and the mid-band up. Does everybody see the difference between this condition where you're taking long only until otherwise noted and the let the box go either way condition? See that? Everybody got it? Okay, good. Tell you what, let's do one more of these, and then we're going to move on to something else. Want to do another one? Let's see if I can find a juicy one for you. All right, ready? Here we go. We're going to do some more together. I'm going to advance the chart beyond 730. You remember, when you see a trade opportunity present itself, you type in a T. Here we go. Okay, here's the thrust up out of this box. We already know that was a trade, so that doesn't count. Here we go. Continue to make the bars larger. Okay, now you're at 741. We're still in the room. Room's still open. If you're trading live, you're still in the live room. Russell's still trending up. There's 744. $7.49. We're at the tail end of the live room. Okay, I'm going to stop it right there. Now there was some T's. There's a small handful of trade T's that came in when these bars formed right here, and I would say that's sort of the absolute lowest end of retracement. You see how shallow that is. You know, the bars just barely pierce the stealth line in line 6. So technically, yes, per our definition, you could say that was a trade entry, and it turned out nice. All these retracements turned out perfect. Every one of these made money, even if you were just scalping it. You know, these are getting at least 6, 8, 10 ticks off of each one of these. A couple contracts is 10 ticks is 50 times $200. So each one of these little $100 scalpies, 2 lot. Another wave of T's came in on these bars right here, which is true. And then the final wave of T's came in over here, which is absolutely true. This is a good definition of it's all very similar location as these other shallow retracements, where in a powerful uptrend, some of them are too. Here's the thing. You know, in a few webinars ago, I went in detail on how to draw a box. And I said some of them are 2-bar boxes, some of them are 3-bar boxes, some are more, like 4 or more bars. And it's not really the number of bars that determine the box. Okay, you could make the case that in some rare is very rare, but in this case right here, for instance, you had like a 1-bar box. I mean, it basically came down. The only way you could avoid this one is to engulf that candle, and you'd be filled on that bar right there. So it's going to vary. It's not, you can't. You know, from my experience, you just can't say this is a 1-bar, 2-bar, 3-bar. It's going to vary from box to box. I mean, you can see here, this one had literally like 1 or 2 in it. This had 1, 2, 3, 4, arguably almost 5. 1, 2, 3, 4, 5 in here, 2 in here. It's going to vary from box to box. Just to be clear, what I'm saying here is that the quantity of bars is not the issue. It's the location of where each of the bars form. So let's take a look at this and show you what I'm talking about. Let me ask a question, and I'm gonna do it this way. Here's how I'm gonna do it. So because there's a lot of sometimes confusion about this. When you're doing a long only box, does the bottom of the box matter? In an uptrend, when you're doing region boxes that are long only, does the location of the bottom of the box make any difference? Yes or no? That's a yes or no question, in your opinion. The bottom of the box. Remember, we're getting long only on these. That's correct. No. It doesn't matter where the bottom could be way down here. It doesn't matter. I mean, you want to draw it nice and clean and have it be a nice, whatever, respectable box or whatever. But it doesn't matter because you're not getting short. Okay? All these, and that's the thing I wanted to explain, because a lot of people were like, well, you're in a nice powerful uptrend, you're taking long only. Why don't you let it take the short? Because what can happen is this, is that you can get a bar closed down like that. You're filled short. It comes down. You don't get the long because it never closed up. This is all hypothetical. And then it comes a little deeper right to the mid band, maybe like here, and bounces and gives you the long trade. Well, meanwhile, you're trying to get out of the short. And it moves quickly, it could go up and get your stop. So basically, that would be counter trend. You're getting short in an uptrend where you might come and find support. So you don't want to do that. When the thing's moving up, you want to swim with the tide. You want to take long only. All right. Now this box right here, would you put the top of the box on this bar? Let's call that A. Right here. You know what? Let me draw an arrow. A is the top of this bar, or B, the top of this bar. A or B. A is the lower bar, B is the higher bar. We're looking to establish the top of the box, which is important because we're getting long. That's the important part of that region box is the location of the top of it, because what you're saying is when it closes above it, that's where you're getting in. Right, the correct answer is A. So what you want to do when you're getting these little ABC retracements, A, B, C, D, you come all the way down here, is you always want to go the tightest bar on the top. See how you have these bars that come down, and then you get this little hanging doji down here? This establishes the top of the box, right here, this bar, right there. A was correct. All right, let's do a couple more. Yeah, and you want to close above. Yeah, it's always a close above, Brian, for me personally. I encourage everybody when you start playing with Object Trader, play with all the different features. The bar close, touch +2. Touches are where you set a touch +2, say on a region box long, and the bars come down like this, and they touch an area like a support area. So there's a touch +2. So within 2 ticks, if it touches the mid band, it'll get you long. Sometimes that's an advantage because you get in, 4 to 6 ticks earlier than the outside close. But the risk is that it can flip and take you out. So in cases like that where you're getting in at the bottom of the box, or even have a limit order here and you're getting in down here, don't put a 12-tick stop on that puppy and let it come all the way and bite you way down here. Okay, don't do that. Put the stop within a couple of ticks of the bottom of the box. So if you're getting in at more aggressive entries, that's what I'm trying to tell you. If you have more aggressive entries, so it touches, you get filled, market order, it's going to put a 12-tick stop way down here somewhere. No, don't do that. Get it right up here tight. And if it flips on you, bam, you're out quick. Toby, when you ask the question that way, it makes so much sense, but I haven't noticed till now. Yeah. Okay. All right. Okay, so let's that was the uptrend. Let's start looking at some other trades. Let me advance the chart to a little bit later in the trading session here on the Russell. Pop quiz. Warning, Will Robinson. How many of you have a trading goal for the day? You don't have to say what it is. Just yes or no. Do you have a trading goal? Everybody know what a trading goal is? What's the trading goal for the day? Does everybody have a trading goal? Anybody not have a trading goal? Yes? Okay, yeah, you don't have to type in. Okay, some of you typing in numbers. That's cool. I see some in 300, 500, a couple of thousands in there. Trading plan. Okay, good, Dennis. Robert, most excellent. Good deal. Kenneth, everybody's got Toby. You've got one too? Good. Everybody, excellent. So a trading goal is a number of how much you would like to make in a trading session, and it can be anything from 100 to 10,000, whatever. And what you want to do is you want to, let's go back over here real quick. So you had all these long trades in the morning. And so let's say you stayed out all this chop. Let's say you didn't get this initial entry. You missed this pullback, but now you're getting the picture and you're starting to get on the bus here, and you nail a couple of these with a couple lots on. You maybe nail 3 or 4 of them, and you're up, I don't know, 550, $600, whatever. You want to seriously think about locking that coin down. So that's what we say in the room all the time. We say, okay, if you're at your goal, go into sim and practice, because you don't want to keep putting that capital at risk. Think about it statistically, and I've asked this question before. Let's do some numbers. Let's suppose you get 1 winner, you get 2 winner, 3 chicken dinner, stop, maybe you break even on this one, and then you get a nice runner like this. So now you're 4 winner. As you continue to win in this trend, what are the odds of having a loss? Are they going up or down? The more consecutive wins that you have, like I'm showing you here, is the likelihood of having a loss going up, or is the likelihood of getting a loss going down, in your opinion? The odds of a loss are going dramatically up. Yes. Each time you take a winning trade, and what happens is, and this used to happen to me all the time, so I know exactly how it feels. You start feeling like you get a little bit invincible. Man, I'm on fire today. I'm nailing this market. I'm just seeing these entries, getting in, I'm getting out, I'm making good money. I'm at a little bit over my goal here. Tell you what, I'm going to press my luck. I think I can keep going. Maybe I should double my goal today. And then you come in here and you think you see a trade. And then you get stopped out. So, just a word of caution, because eventually chop will come back. Brian says, stop at your goals. Greed kills. I know from my past mistakes. Good deal. Yep. All right, good deal. Most excellent. All right, now let me get over here, and I'm gonna let's do a short trade. Let's look at some short trades. Stand by. All right, here we go. Now I'm going to advance the chart, and you tell me when you think a short trade comes in here, signified by typing in an ST for short trade. By the way, just a quick side note, if you don't have a trading goal or any kind of trading plan, you can keep things pretty simple. I mean, I know a lot of traders that are starting off, and this is a good confidence builder. The main thing you want to do is, like I said, instrument selection. You want to find that instrument that speaks to you. It's like finding a good partner or a good spouse or wife or husband or whatever. It's almost like that, because you're making a living off of this, right? Second thing is you got to work on trade entries. Trade entries are the key. If you don't master the trade entries, it's going to be hard to do everything else from there, because the trailing stops and the targets and all that aren't going to matter because you got in at the wrong spot. So instrument selection, trade entries. You got to learn to see them. Now I'm going to advance this chart bar by bar, and you're going to type in ST when you think there is a short trade set up that you would take. Ready? Here we go. Okay, we're right here at 11:58, so this is coming up to noon California time. So this is the last hour of trading. Remember, you're typing in an ST if you see a short trade entry. Okay, now we're at 12:07. We're getting into the last hour. It's 12:19. $12:36. I'm chopping around here about a half an hour now. Blow up the bars nice and big. 1248. Okay, I'm going to stop it right there. There were several short trade entries. I mean, almost everybody here tonight did gold stars to all of you. Now, the aggressive STs, short trade entry comments, came in when these bars were forming right here. I would consider that to be aggressive. Simply because if you look at the background, you haven't, this swing is still holding and the background is just turned from green to opaque or a transitional color. And so it's a little risky entry. You might have gotten a scalp off here. You definitely got a scalp off there, no question about it. And you could have tightened your stops. And you could have had an initial, as I said earlier, with these aggressive entries, don't take, or go ahead and take the OT region box, let it set the 12-tick stop, and then drag that puppy right down here within a couple ticks of that swing. So you don't get bit in case all of a sudden the uptrend continues and it bounces off of here and blammo right back up through your face. Now I want to be clear about something, and I want to clarify this so we're all on the same page here. Okay, some of you typed in a T when these bars formed right here. Now that is not, just to let you know, okay, that is not correct. Before I go on and show the other trade entry, why is that not correct? Why is this circle not a correct entry? Anybody? Why is the circle not a correct trade entry to get short? Well, Charles, look, it's dropping. It broke that swing. You said that swing was holding. It broke the swing, and it's heading down. I better get on the shorty train, ride it on down, and start making some money. What do you mean that's not right? You got to short it and broke support. You're just messing with us. That's the thrust. Good. You're selling the thrust. We don't do that. This is a no-no. If the trend is down, the thrust is down. So you have to wait for what? The retracement. And you get it right here. It comes in within a tick of the midband and rolls over perfectly for you. Now, a lot of you typed in T's here. And that is correct. This is actually the correct answer right here. And you could have golfed it like that. You could have golfed it like that. However, by hook or by crook, you were short on one of these bars right here. Close that bar. And then it never looked back. It just fell off the map. And it turned out to be a beautiful short. Look at that thing fall off the map. Could have trailed your stop down to all the way to here. Let's do some quick numbers. How much was this short trade worth if you took it between, say, noonish and the close of the market? Here, let's do some quick math. Let's see what the hell much that thing. You could have missed all the trades from the morning, everything. You were asleep. You slept in. You didn't wake up till noon. And you took this one short right here. Let's say it wasn't the aggressive one, not this one, and you didn't sell the thrust. You patiently waited for a box up here. Let's get a round number here, 89.50, and you got out at, I don't know, 86.30. 32 ticks. Times 2 is $320. 2-lot trade on 32 ticks on the Russell would have been about $320. So between $3 and $350, less commission. Yeah, and these come along all the time. These little 30-tick moves. What you're going to find on the Russell, because I trade it all the time, I can just tell you, your scalpies are going to come in between 8 and 10 and 12. In other words, it's not unusual, like you saw in that big uptrend, to get a pop, right? 8 or 10. You peel your first lot off, or 2, or however many you got on there, if you have multiples. And you tighten your stop within 2 or 3 ticks of your entry, and then you trail the stop on the runner. That's how we do it, right? That's how we do it in the room. No, this was still not an uptrend over here, Robert. You can clearly see we went from this uptrending move on the green background to a transitional background with lower highs and lower lows, and the short entry was aggressively here, but the actual good entry was right here. On that kiss just under the midband. So it's just shy of a midband trade. And then you got a scalp off, and if you ran all the way down, you made a couple $300. Okay, Tell you what, we got a little bit of time left here. What else do we want to look at? Let's take a consensus. What other instrument let's say if we only look at one more, what would it be? By the way, while you're pondering that and typing in your instruments, I want to show you one other thing real quick here. Now you see how that Russell chart was so smooth? We just looked at probably, I don't know, a dozen trades today. I'm going to show you something different. The evil one. Hey, Maurizio, I didn't see you come in. Ciao bella, my friend. I didn't see you squeak in the back door there. Hey, what do you think about this? This looks pretty tradable. What do you think? Give me some of that. What do you think? Anybody want to get in here and start trading your money with this? This is YM today, into the close. That's some good trading. Come on. Take the trades with me. Wow, we got a whole slew of 6Bs. Well, there's your YM, Toby. No way. I wouldn't even trade it with your money. That's a good one. All right, well, I'll tell you what. For the heck of it, let's go back and look at the open on YME. YM and NASDAQ, what they giveth, they can taketh away. Let me just put it that way. And let me show you some examples on here. Let me show you what I'm talking about. Giveth and taketh away. Okay, here's some giveth. Now, if you said you don't like deep retracements and phantom trades, well, if you're trading YM, you better get used to them because you're going to get a lot of them. Here is an example where it respected the mid-band. You broke down, come up, you kiss it, come down, kiss it, and you get a nice short trade. This is about the end of around the close of the room. Look at these examples here. Would that drive you nuts? You're expecting another kiss of the mid-band, and he comes all the way up there. Does it again right here. Does it again over here, even deeper. How would you like to draw a box here? This is an example of a losing trade right here. How'd you like to draw a region box right here? Get filled short maybe over here on one of these bars. It gives you like 3 ticks, and then bam, up here it takes you full stop out. No, this is YM. I'm showing YM here. This is YM. Let's go back to the open. Now, we got a lot of people who trade YM. I know we show it in the room. I call trades on it. I know Gary trades it. We get a ton of people who trade YM. I'm not disparaging it as an instrument. I'm telling that what I'm saying, to be clear, is that its volatility can be rough. I mean, look how this thing comes down. Here's 630 over here. You get a shot up, comes down, kisses, get the short, come flipped, you get a little bit of a long, big sell-off here, comes up, you think it's going up, it gets a huge spike right back down in your face right here. And then you come over and a lot of traders say, well, hold on, Charles, look. The thing ran from here, 620, all the way to 684. That's 60 ticks on this move alone. And then it pulled back into here, and you got another, I don't know, 30 ticks. That's just handing you money. Wait a minute. Well, hold on. Do you think you maybe took any hits in some of the chop over here? You think you got a little chopped up before you caught that 60-tick run? That's all I'm trying to say. That's basically what I'm trying to say, is that, there's cases where, if you're comfortable taking losses and hits, and you can withstand that. Here's an example of another potential loss and how that could work. Here is a box right here that quite possibly could have filled you long on this bar right here. And then bablamo, that probably got your stop right there. So, would you have jumped right back in and taken this long after a hit? It's hard to say. Mario says, yeah, YM beats me too harshly. I just stay away from that instrument. Yeah, tell you what, we're going to run out of time here in about 3 minutes. Let me just pop a couple more up real quick here. Let's get a crude chart up. Let's look at a couple of crude trades. Let's look at a couple of gold trades. And Dennis wanted to look at 6B. I don't know if I can get to squeak 6B in. Dennis, do me a favor. When you come to the next one, can you remind me early on that one? Early again, we can, next webinar we do, just remind me. 6B is the British pound futures. I can look at the currencies next week. Okay? Yeah, let's do that. I'll bring the currencies up. We'll look at 6E. We'll look at them all. We can look at 6A. We can look at. And I used to do that in some of these Thursday ones. It's another alternative look at. Okay, here's crude today. Yeah, sure, Mindy. No problem. We'll get the currencies up next webinar, definitely. Now, I wasn't in the room. Did Gary caught these shorts, right? These retracements on oil up into here, these rollovers. I think he caught these. His first one was right around 6 o'clock. See him? See how it came up, kissed this resistance level? Get these off of here real quick. Oh yeah, sure, no problem. No, we don't do penny stocks. No stocks. This was actually 3 different shorts. First one was here, broke the stealth in line 2. That's our criteria. Yes, broke the stealth in line 2. That's just like on the upside, has to break stealth in line 6 on an uptrend. Here's another roll right here, and then here's another roll right here. Now, as I recall, right around 7 o'clock, there was another box that formed right here that you could have let go either way. I personally did not take this trade, but I think Gary did and caught the long side of this. In fact, I think he said buy it down here. I can't remember. I wasn't trading too much crude oil today. You had a deep retracement here that could have caused some trouble for you. You got another long double top, and then it came over. And by 9 a.m. Pacific, she went into free fall. This is your big short right here. Come up, you break down. You come up, you kiss, you kiss, you kiss. Three opportunities to get short, and then bablamo, down they go. Now I can show a gold chart, but I think gold was pretty choppy today. Gold is one of those ones where it can be moody. Moody meaning some days it's good gold and you get a nice move and it's clean and respects swings and bounces off the midband and life is good. And then you get the moody gold. Let me show you what I mean. Moody gold is not friendly gold. It's not, it's not running and trending and giving you good trades. So today was choppy, angry gold. 630 was over here. So as I recall, for most of the live room, she was stuck in this little sloppy range right here. Okay, 630 is like right here. Remember? Here's 730 over here. It didn't really break until here. So you had to put up with all of this. It was sideways to down, so you were wanting to short resistance, but you had to be very patient with it because here's 630, here's 7 o'clock, here's 730 all the way over here. You could have boxed it there, you could have boxed it here, there's a couple of places you could have boxed it in. Last quiz, and then I'm going to wrap. Is this a good region box? Yes or no? Last question. Just type in a wire and in. Hit a button. Last question of the day. Is this box a good region box? Yes or no? Right here. This one I just drew. Pretty juicy. Look, it got filled short and made some money. Woohoo! 20 ticks, $10 a tick, 5 lot, 10 million bucks. This is a chicken dinner box, I'm telling you. Tomorrow gold gets a box like this, I'm loading for bear. What do you think? No. Good. Absolutely, that was a trick question. This is the thrust part. Right? We don't do that. Please, a million times please, practice on getting away from buying and selling thrust moves. I know the psychology of it. Well, it's breaking down. I can just take, how do I know it's going to go 100 ticks and I'm going to miss it? Look, it's going to retrace. It will. It just does. They always do. Now, if this swing held and you came back up into here and kissed and rolled and then had another breakdown, yeah, that was acceptable because you're retracing. Right, good. Everybody got that right. All right, let me stop the recorder.